Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review on late Friday morning, December 22nd. Santa's almost here. I hope everyone has a great, whether you celebrate or not, I hope you have a great long holiday weekend. I hope you're starting out a great long holiday week. Our offices will be closed Monday. I'll be kicking around next week. I got to publish Growth Investor next Thursday. So if you do have questions, you can email me directly. I'm happy to answer them. In terms of the market, when it comes to the intermediate term, which is my main focus, nothing's changed. I mean, almost everything looks really, really good. We got intermediate term trend is up for stocks, sectors, obviously the major indexes, great breadth. You're not seeing a big spike in defensive stocks. You're seeing a lot of stocks hit new highs, and interest rates are trending down, and leadership stocks are acting well, okay? Short term, we did finally see some profit taking show up on Wednesday. And I guess short term, it's a little bit of a coin flip. You have, positive seasonality here, plus these sort of runaway environments. They tend to have these sort of sharp, 1 or 2 day like shake the tree events. So, what's wrong? And then they just kind of kite higher. That might be what's happening here. That said, there's no question a lot of stuff is sticking straight up in the air. And even before this week, or before Wednesday, I should say, we saw 4, 5, 6 trading days of growth stocks, which had been leading, kind of stalling out a little bit. Again, no big deal. I'm not saying they were cratering, just stalling out while the broad market kicked into gear once the Fed kind of gave the all clear last week. So we'll see how it goes. I guess I'm being a little bit more discerning short term in terms of buying. I'm certainly not selling, positions, a bunch of positions on the way up here. I'm still overall bullish, but still looking at being a little bit more discerning on the buy side in terms of what to buy, number one, most importantly. And they're just trying to get a little cooling off period, maybe let some of the moving averages catch up, like the 25-day line, stuff like that. Cabot Growth Investors Model Portfolio didn't do anything this week, about 1 quarter in cash. I'd like to put some money to work next week ahead of the New Year holiday. So we'll see how it goes. But like I said, being a little discerning, so hopefully some opportunities arise, okay? All right, let's hop into the charts. As usual, I'm using a program called MarketSmith. You can learn more at marketsmith.com. It's a product of Investors Business Daily. Again, here was your sort of reversal on Wednesday, and it was a good size one. I don't have the percentage in front of me, maybe 2% high to low, 2.5%, something like that, depending on the index. But so far, first of all, just on a tangent, because why not? We all have some free time here, right? What I have noticed in a lot of these, this is kind of these runaway markets where there's no, sometimes we call them NPA markets, no pullbacks allowed, What you see is when you do get a pullback, it tends to be 1 to 3 days. Doesn't mean the market does this, but it might come straight down for 3 days, sit around, and then get going sort of thing. So far it's just been 1 day. Maybe we get up here again and reverse lower next week. Maybe there's some news, interest rates pick up, or I don't think there's going to be meaningful economic reports next week, but who knows, maybe early in the new year, there's something like that. But overall, even short term, the trend is up, but let's see how it goes. Intermediate term, listen, the 25-day line for the NASDAQ is down here. It's approaching, 500-600 points below. I guess I'd say it's 550 points below the index right now. So that's more than 3%. So plenty of daylight. The intermediate term trend is clearly up. And, I'm not going to spend a ton of time on the indexes because they all kind of look the same. Big reversal Wednesday, but just kind of kiting higher again. IWM's even stronger. It actually kind of kissed new recovery high this morning before pulling in. The broad market's definitely been stronger than the big cap indexes, but they're all very strong sort of thing, okay? This is the mid caps, and this is the New York Composite, okay? Again, more of a broader index than just the S&P or the NASDAQ. So intermediate term trend is up. Same thing with all the, you look at, it doesn't matter if you're looking at, XLI's industrials or SMH, which had, you could see it pulled back in here to the 25-day line, but then ramped again. Again, here's your 1 day, I don't want to say 1 day, I guess this was a 3-day shakeout here. 1, 2, 3 on the SMH before, bouncing yesterday and stuff like that. So, various sectors, they're all looking pretty good. There's no rush into defensive stocks. This is the XLP. If anything, it's clearly lagging. It's going up, but it's not like it's, people are worried about Taiwan or something and, they're all rushing into Procter & Gamble and Coca-Cola. And this is despite, a weaker dollar. Obviously, rates have come down. I was told for months that, the XLP was weak because rates were up. Well, here we go. Rates are coming down. This is going up, but clearly not leading the market. That's pretty good. And then, of course, rates themselves, This is the 10-year note. Chart's a little bit messy here with this RP line, which I can't get rid of on this chart. But anyway, suffice it to say that yesterday morning they actually hit a new correction low. They've bumped up a little bit, but clearly a big decline, 5%, call it on the 10-year to 3.9. The 5-year note, same sort of, overall, the exact levels are less important than the trend, right? So we're down here. So maybe there's a backing up here in rates, and the market sells off. Maybe that's a catalyst for a short-term wobble. Maybe we back up in rates and the market goes up anyway. Who knows? So, but overall, when you're looking at the evidence, it's very, very strong. I would just say, like I mentioned in the intro, this is just, and these aren't perfect measures, but so this is the IBD 50 index. I've mentioned it before. It's just the IBD 50 and the IBD 85 index. They're basically just two revolving lists that they track performance of. The list changes, I think, week by week or month by month, but it's basically stocks that have good relative strength, good fundamentals, good earnings growth. So it's stuff that I tend to look at, right, for the most part. And you can just see it looks fine, right? I mean, the price chart looks fine relative to the market, which is this blue line. It's, lagging a little bit. This is kind of what we're seeing here. It's not like there's weakness. It's not like a lot of stocks have stalled out. Oh my God, they're showing these red flags. They just kind of stopped going up for a few days. Okay. Same thing with this IBD 85 index here. Again, we're talking very short term, but just a little bit of underperformance here the last week or two. So even before this week, we saw growth kind of take a back seat while those broader indexes we showed you, like say IWM, really picked up here and were, hitting new highs as of this morning. Okay. The other thing I just want to mention, since we're on the IWM, a couple things, and I can't really show you all this on MarketSmith. It's just other research, but we are starting to see some more of these hyper overbought signals, blast off indicators. The last couple of years, we've seen kind of some, I don't want to say second rate, but kind of not first rate blast off indicators flash. And obviously they didn't do well in 2022. We did see one granddaddy indicator flash in January of this year. And these tend to be longer term things like, hey, over the next 3, 6, 12 months, it's kind of a, it's a sudden change in perception. It's like dropping a boulder in a lake and the ripples go out a while. And it has worked actually, net it has worked, but it's been choppy, Now we're starting to see, one thing that I'm actually going to be writing about this next week. Might as well finish the year on a positive note in Growth Investor. But, the Russell 2000, I think it was on this day, closed 13% above its 50-day line, which is very, very extreme going back 30 years or 35 years. And when it's coming out of a correction, not just blowing off top, like it actually did that in March of 2000 near the market top, but that was, it wasn't coming out of a correction or anything like that. It usually leads to good thing. We've also seen some breadth measurements like the S&P 1500, more than 90% of stocks above their 50-day lines. Historically, a year later, the market's done pretty well. So I'm going to dig into some of that data this weekend before Santa comes or whatever and see how it is. But we're starting to see more of that in and of itself. That's good. I think combined with all the other evidence, it's better. And, obviously it should portend pretty good things. So overall bullish, but a little bit, like I said, a little bit more discerning in the short term, just realizing some of the stuff that I'm looking at is kind of stalled out here. Maybe it pulls back into the 25-day line or something like that. Provides a little bit of entry. And given the runs they've had, pulling back to the 25-day line might see a stock down 4, 5, 6%, so it's, let's see how you can time it. Okay. Just getting into individual names, just a potpourri of things here. GitLab, I've mentioned a bunch of times. I've just been thinking more and more. It's a good story. It's got growth. It's profitable, that sort of thing. And I believe, if I'm not mistaken, sponsorship it's not roaring ahead, but sometimes when you get to 400 funds, not that 400 is a magic number, but below 400, once it gets to 400 or 500, it's a little bit more meaty in terms of liquidity. So it just crossed over 400. So maybe it's still early, but I do come back to this breakout day, which was 9.9 times volume. And just 10 times volume, we've seen that in some of these names that aren't crazy thin. I'm not talking about a biotech stock that report, some development stage company that reports a drug trial and it goes up on 50 times volume. I'm talking about something that's at least somewhat liquid that trades a bunch of volume. And sure enough, that usually the close of that day can be, I'm not saying a stop, but just kind of a line in the sand. And so far, the stock's been acting well. So we'll see. GTLB, I'm still keeping an eye on. Vertiv Holdings, I go back and forth on this because at the end of the day, it is, I don't want to say late stage. That means it might top. But, it's obviously, it's not like it spent a bunch of time in here shaking people out. It really didn't. And so, in one hand, that's good. On the other hand, it's like, well, maybe there's some weakness in here. I would say, or weakness coming. I would say 50 is kind of obvious round number resistance. So we'll see how that goes. But so far, it really, again, you kind of have these 2-day pullbacks. It goes from 50 to 46 in 2 days. Well, that's kind of scary. But then it's just kind of holding above that. So I almost wouldn't mind if this kind of could chill out for a bit and emerge. The moving averages start to catch up further. Just another name I'm keeping an eye on. Dave & Buster's is funny. This is play. It's kind of like, first of all, it's not super. I mean, it's borderline liquid for me. But, it's kind of like Dave & Buster's, I do like, the monthly chart. So just chart-wise, I mean, you just have this sort of endless resistance area, even right before the pandemic. So it's going back 3-4 years at this point. It's cheap. The cash flow is huge. They bought back like 17% of their stock this year so far. And now it's clearly, the market's in gear, obviously, and it's trying to change character in here. I don't know. I mean, part of it's like, you want to swing at your best pitch. Is this the fastball down the middle? I don't know. And clearly it's, like I said, about looking for better entry points. It's not exactly pulling back. But, so far, every dip since earnings, I mean, even, just hourly dips have been bought. So it is a name I'm watching and debating. AppLovin is an interesting one. Again, like the late breakouts, I'm not a big fan of. But to me, the stock, really broke out earlier this year, right? So it's already kind of in this big uptrend. It's not like it's just still bottoming out. And then it kind of had this narrow base, and it tried to get going on earnings. That's what this spike was here. But even though the market kind of perked up, the stock wasn't ready. So it pulled back further. Now it's kind of trying to bubble up here. It's just a name I'm kind of keeping an eye on. Net. You just kind of have this sort of shelf. It's kind of in the online advertising, they have a new product and stuff like that that's driving growth. The growth is a lot better than it looks actually down here. So again, maybe you kind of chill out here for the rest of the year, see what happens in early January, but just a name I'm keeping an eye on. This is old friend AXON. This is Taser, the Tasers, and it's much more than Taser these days. But it got, it's one of these names that got destroyed with everything else, but then came all the way back really to new high, it just kind of nicked out to new highs. But then once it did that, it kind of expended all its energy and spent the next, say, 6 months in here, kind of building a new launching pad. And now it's starting to let loose on the upside. It's not powerful, like, oh my God, everyone's getting in. But it's 1, 2, 3, 4, 5, 6, 7, maybe, looking like 8 weeks in a row on the upside to new all-time highs. Not the strongest RP line yet, but it's transformed into kind of this recurring revenue story. And as opposed to hokey, speaking of mutual funds, it's gone from 700 to 1,300 funds here in the last 3 or 4 quarters. So kind of an interesting name. Just running through, like I said, it's kind of a potpourri. I mean, some of these names aren't exciting, but I also feel like they might have a pretty good chance of working if the broad market does. This is Martin Marietta, construction aggregates. Not going to brag about it, at a cocktail party. Who the hell has cocktail parties anymore, by the way? But, runs up to new highs. Just very tight, kind of just thrust higher, tight, 25-day line, thrust higher, tight. 500, again, round number resistance. You often see that. So maybe the 25-day line catches up, but that looks pretty good. United Rentals. Now, fair disclosure, we did in the top 10 update today, I did say we kind of got in basically on this breakout, and within a few days are up 10 or 15%. So I said maybe take some partial profits up here. But it just in general, when you look at the weekly chart, just kind of a beautiful breakout. Again, broad market, economy could be getting better. The Fed could become a tailwind, or at least it's obviously not a headwind anymore. So we'll see how it goes. You did have this shakeout on Wednesday, but URI, kind of an interesting, just cyclical play that, again, you're not going to brag about. It doesn't have a great story, but my guess is a lot of these can work okay. I wanted to mention NVO. I still keep an eye on Lilly. I don't know why, but I just, maybe just because the story is so big, and so maybe it's topped out, but you do feel like a couple of good days could change things. But NVO, which is Novo Nordisk, they're the other one with the weight loss drug. I do find it interesting that it is rebounding here and almost within a couple of points of new closing highs here. So NVO is just, I am kind of keeping an eye on it. Broadcom, I know you all love $1,100 stocks, but I'll probably mention this in next week's letter too. But one thing I learned a long time ago, I remember actually it was 2007, was when you get a big liquid stock that has, it's a good story. I mean, it's not a total turnaround. They got good growth, good area, good sector and stuff like that. And then you just see just crazy buying volume. Clearly that's not me and you buying 100, 200 shares, right? This is like billions and billions and billions of dollars. And I think since the I don't know if it was AMD's announcement, but something has kicked some of these stocks up. You know, it's not like Nvidia's if you look at Nvidia, just to do this real quick, you know, it looks fine, honestly, digesting. But it's still south of 500 is my point. When you look south of resistance, when you look at this, this is, you know, something is really there. So, you know, maybe you pull back in here. Yes, it's high price. Just buy fewer shares. Pretend it's a $110 stock and buy 1/10 as many shares, sort of thing. But, you know, maybe you get a pull back in here. But it's hard for me not to flag this sort of volume cluster. And I think on the weekly chart, this is all-time weekly volume here, you know, on this surge last week. And obviously it's a holiday kind of week this week, but very, very tight in here. So very interesting to me. Broadcom, probably not going to go to 2,000 in the next, you know, 2 months or anything like that. But, you know, could be kind of a high odds play. Elsewhere in the group, all the way down at the cheap price of $550 is Synopsys SNPS. But I like this, you know, it sort of had this, it's not an ascending base, but it kind of had this rest period overall. But you can see it tried to keep getting going here, new highs. And then finally, when the market did, it really let loose. Now, it did have a shake on earnings to the 25-day line. And here we are with another shake today to the 25-day line. Maybe it's cracking. But to me, it's kind of a decent risk reward in here with a stop. Well, I'm not going to give exact advice on this video, but, you know, I'm just saying risk reward. Why? You're in an uptrend. It has wobbled around in here. So maybe it finds support and gets going, and, you know, there should be some support pretty close by. I'll leave it at that. Bull market stocks are looking better. This is KKR is probably the strongest. You can see it's really let loose on the upside here on the weekly chart. 7 weeks up in a row, like the market. So it's kind of ran into these old highs. It's not unusual for it to kind of run into the new high, like the market did, run into the new high ground, then reverse temporarily. But so far, it looks more like a trend knockout type move. You know, we come in next week and the stock's down here, different story. But somewhere on this pullback or a rest period, just something to keep an eye on. Blackstone's another one, not as strong. Oops, that's US Steel. Blackstone's another one, not quite as strong, but obviously acting well since the Fed kind of gave the okay. Just a couple other names, you know, Toll Brothers. Keep an eye on some of these. If you don't own like building stock or housing or construction or whatever, you know, maybe a nibble here, but keep an eye on a couple of them because, yeah, you might get maybe rates bump up a week or 2 or 3 from now for whatever reason. You know, maybe the market's hot and people take money out of bonds and put it in the stocks. You know, what about that? But you might get, you know, see if you can get some pullbacks here or maybe some of these consolidations in here that help the moving averages catch up. Toll Brothers is one example, but it could be a variety of stocks, okay? And last but not least, I'll just mention this because, again, kind of back on that big liquid theme with Broadcom. This isn't the same thing, but this is Boeing, which I just find kind of, you know, it was kind of down whatever weeks in a row, and now it's just straight up whatever weeks in a row. And I'm not just mentioning this for like academic purposes, but it does have huge cash flow. The story's there. And it's kind of, this is one of those names where everyone's been waiting. I don't mean everyone, but if you're a mega cap investor, they've been waiting for, you know, kind of the consistent, you know, sales and earnings and all this stuff. Cash flow is big, even though earnings are negative here. So if 2024 is going to be big above this year, which is already actually pretty good cash flow wise, these aerospace stocks can trend, and this certainly is kind of a runaway move. My guess is the first pullback, whenever it happens, will be buyable. You have to see it to believe it, you know, type thing. I mean, if it falls 30 points in a day, that's different. But odds favor you get some sort of pullback or congestion. Something like Boeing could be a more conservative, non-growth way to do things. But anyway, there's plenty of growth stocks out there too. I featured a lot that weren't today. But ideally, as some of these growth stocks maybe consolidate, like here's a CrowdStrike or whatever, you know, this has been a real leader. It's barely pulled back, but maybe maybe we're here in a couple of weeks doing the video and it's still here, or maybe it's down here and it looks a little, you know, it had a bad day or two and shook some people out, you know, but still in an uptrend. So that's kind of what I'm looking at for some of these growth names in the short term to see if they can consolidate further. Maybe the market consolidates a little bit too, and provide some better entry points, okay? But overall, just, you know, as we head here through Christmas, I'll do another video next week right before the new year, but overall, still positive, intermediate term, really not much bad you can say about it. Short term, we'll see. Maybe Wednesday was the start of finally some profit taking, some short-term wobble phase. There's usually more than just one bad day, so it wouldn't surprise me if there's a little bit more of a reverberation, but overall, assuming you're not hyper-focused on the day-to-day action, I'd be holding your winners and looking to put more money to work, ideally, on pullbacks and some tight consolidations. Okay, that's all the time for today. Again, have a terrific holiday weekend and hopefully a nice holiday week and a half or whatever as we head into the new year. I will be back again next week, though, for another Cabot Weekly Review, so I hope to see you there.